Hello, I'm Robert, and welcome to my channel, where I discuss everything automated algorithmic trading, or simply algo trading. It's been a while since I put out a longer video, but it's been with good cause and reason, as today I am about to introduce a new feature to the OANDA gridbot. This feature is only available, though, if you sponsor the Relay repository. Any of the tiers, including the $5 one, unlocks this feature. It has been a difficult one to build and perfect, and one that has caused a great deal of heartache over the years of my trading. That is none other than the stop loss. I make no secret about how this tool is despised. And I do mean despised. A stop loss is a very powerful tool that can be a very huge asset in risk mitigation, but the very nature of it, the very fact that you are deliberately taking a loss, opens you up to one of the most powerfulest, dangerous weapons on the market, the stop loss harvesters. You will spend countless hours on YouTube, Reddit, and just about any social media platform with experts telling you that you should use a stop loss and experts telling you that you should not use a stop loss. I personally am not a direct fan of traditional stop losses because of the harvesters, particularly if you are using an accumulation style trading methodology like what I offer through Jackrabbit TV. But they do have their place, and they are a critical tool for those that choose them. When dealing with grid trading, there is the risk of what is often called a runaway bot. And that is where the market just goes completely opposite of the direction you want it to go, and it doesn't stop. That is one of the most dangerous aspects of a grid bot. The fact that the market can just blow you out of existence and wreck your account. A stop loss is often used with grid trading, but a traditional stop loss is by the very nature a problem. If you use a fixed percentage, or even if you use a dynamic percentage per entry, it becomes problematic because sooner or later it's going to bite you. And that has really been the biggest issue of implementing a really functional stop loss. But I believe I have managed to finally come up with a methodology that actually gives a grid bot a reasonable, workable, and sustainable process that is able to function and still protect and keep your account from being decimated. I'm going to go through how to actually put it in your configuration in a few minutes, but I want to talk about the process itself with what is on the screen. Now, for the purposes of my account, I have decided that I do not want my grid to go above 20 positions. And that is critical because that is exactly how this stop loss works. It doesn't stop out at a specific percentage, but rather at a specific number of grid levels. And it has very specific rules. Those rules are that it cannot make a purchase if it is at my level limit unless it institutes a stop loss. So right now, my Euro USD has 20 positions. My stop loss is at 20 positions. So I can't make a purchase unless I sell the oldest position at a loss in order to maintain my absolute level of 20 positions. This is what makes this technique different than most other stop loss techniques. It has time to recover, and it has a methodology by which it can fluctuate with the grid itself. Since the OANDA gridbot is a floating grid, meaning it can move up or down with the market, this type of a stop loss really is the only way to give you a reasonable protection against harvesters, because it is completely unpredictable in that a harvester would have to try to figure out the bot's parameters and steps in order for it to be able to harvest effectively any upper or lower boundaries. And as we have already seen with this grid bot, margin, NAV, volatility, buy pips, sell pips, and a profits table are all used as a way of determining the various steps between each position. So nothing in this spot is linear in nature. Subsequently, having a non-linear stop loss is just as critical. So let's move to my demo account, and you'll see on the screen where I've talked about the margin units, margin pips, volatility, and so forth, and how different those numbers are. I've also made a change in the way the reporting is on the gridbot. Instead of giving an absolute value of what the margin limit is, it now reports how much margin you have left for a given asset. And this one is expired, so it won't purchase. So by being able to adjust everything so meticulously within this bot, including its new capabilities of the stop loss, it becomes more resilient to run on a longer timetable and more capable of surviving both up and down moving positions, no matter what market you are trying to take. It makes a reasonable approach to a very complicated and difficult situation. So now let's get into the logs and actually demonstrate how this process occurs. You will see in your logs very clearly a stop loss and how it is rendered. You will also see the direct impact of your balance. Again, I emphasize, this stop loss will not trigger unless you are holding the specific number of levels already. And if you have an existing grid bot, like what this one was, and then implement the stop loss after the fact, you will see this kind of effect where it will just take out everything that is not within that limit before it is allowed to make a purchase. If the bot wants to purchase, it must get rid of the oldest level first if that level matches the stop loss level. That is absolutely critical to the functionality of how this works and why it works so well. So with this particular example, all of these positions were sold at a loss, and you see the direct impact on the balance. Then it was allowed to make the purchase. So if you have 20 levels and it wants to make the purchase, it must first sell the oldest level, leaving you with 19 levels, and then it repurchases the 20th level. Your whole grid is now capable of dynamically moving up and down on the basis of this level, this limit. And then, of course, it begins the sell process all over again. This is the fundamental and critical difference that this stop loss brings to the table. It gives the position time to recover, and it gives the bot a very clear way of implementing it. It is really the best of all worlds in a way that can capitalize on the bot's ability to constantly move up and down, making small trades before it actually has to deal with the situation of needing to get rid of the oldest trade first. It's a reasonably effective approach as well. So let's now look at how it looks if you were to see a mechanical process laid out, what the bot is actually doing. All of my orders, my actual amount in margin that I have, so forth. We've seen this table before, along with the order book, support. Well, actually, here's my mouse. The left side is support. My mouse will cooperate. And the right side being resistance. So this is stuff that's been seen multiple times, but it demonstrates how you control the bot. It demonstrates how effective the stop loss is because you see the actual orders in the bot based upon bot mechanics. So let's get into the actual configuration file. Okay, now I'm going to separate these a little, and I'm going to break them up. Remember that each one of these has to be one line only. So do not do this in an active and running configuration, because you will break it. I'm doing this because I want you to see the entire configuration in one blow. And the new feature, the stop loss. It's this easy once you update the code. Stop loss 20. 20 levels. Now this can be whatever number you want, but be sure you don't exceed your margin. And as you can see here, because I'm trading 2 coins, I have changed my margin limit. So as you can see, I'm still running a very aggressive, with the exception of the cluster style. I don't want clustering right now, but I'm also running a slightly different variation. For example, you will see unit steps. Instead of the normal prime, I have decided to use only one unit, which you've noticed in my previous short videos, how it stair steps one position at a time. Being that I have such a limited level of money involved in this one asset, I wanted to make sure I stayed within my levels extensively. I also did some testing and set up my starting position to just 20 units. I specifically went with a unit size that would give me 1 penny per closing a ticket. In essence, what you are looking at is the configuration of a penny scalper, and it does exceptionally well. But that is the whole point of such simple trading, and by using a stop loss in this methodology, no matter where the market moves, up or down, I will always have a good control and the bot will never run away. That is critical, the way volatility has been lately within the market. That is also critical as both sides, being bulls and bears, continue to really fight it out as to who will have control. I want my bot to stay in the game. And by being able to take these strategic losses on a algorithmic scale, I'm actually able to control extreme situations fairly well. Since the likelihood of the market not just running up rapidly as a sharp spike isn't going to be as prevalent as more of an up-down process where I can buy and sell several different positions at a time. I'm able to even represent an internal recovery system based upon each stop loss I might take. That really is the critical point. For example, my first position is going to cost me 37 cents. But because of the way the gridbot works and the number of positions I have scattered, I have already made that 37 cents to take that hit if I have to. So the recovery point of the grid encompasses the reality that it is going to take losses along the way. But because of the nature of the grid, it can try to recover sections of those losses as the market continues to fluctuate through volatility on a random and chaotic basis. It really is the best of all worlds in a way that helps you control risk and can keep you in the market, specifically at a reasonably price point risk level, meaning my budget to my total margin consumption. In this particular case, as we saw, I'm only using roughly $10, or what equates to about 2% of my total margin allotment that I have strictly wanted this bot to use for this asset. So I could take several consecutive losses in a row and not risk anything that would hurt the bot. So as the market's support and resistance continues to fluctuate and move appropriately to the bulls and the bears fighting it out, having a stop loss and the mitigation points built into the bot all but guarantees I will have a reasonably sustainable process. I say it that way because the market is unpredictable, and yes, bad things can still wreak havoc throughout the market. But such a technique as this, that is completely dynamic and unpredictable, gives me an advantage in a market out to wreck everyone. Now, as I said at the beginning of this video, this feature is only available if you sponsor the Relay GitHub. Then you'll get access to the private repository which has this code in it. Simply update your code, restart your bot with your stop loss in there, and you will have a floating grid. This is my live account. Now I have both of these in short position, but USD franc is a counter covariance to Euro USD. So when Euro USD is going up in price, USD franc is going down in price. So they act as a natural hedge against each other in the same account. But that means you can't have a large amount of budget because you can't exceed 100% total throughout all of your assets in one account. So here I am roughly just shy of 80% total consumption, or roughly 76% actually, between both of these assets. And they are both set up the same way. The only difference between this configuration file and this configuration is just the asset itself. So now that you have this new tool, test it first. Keep your demo account running. Test it. Control it. Understand how it works. I personally think if you're going to trade long term and you want to deal with a small budget, this is a valuable tool, even though I hate stop losses. I despise the idea of deliberately taking a loss. But it is a necessary evil to protect your account if you plan on setting up something that is going to run months over months, or even years over years. And that is my intended point of this bot. Long-term functionality where I may not be able to actually sit and babysit it every minute of the day. It needs to be able to think and manage unpredictability, and a stop loss is really a vital tool to that, even if it is a hated tool in the process. If you're only planning on running your bot for a day or 2 days, that may not be an issue, but I am planning long term. Both of these assets I am planning on running for at least 1 year. And as we've seen over the last couple of years, anything and everything that can go wrong with the market will go wrong with the market. Plan your risks carefully. I cannot emphasize that enough. Think about your worst case scenario. Plan for it to happen. Not once, not twice, not 3 times. Plan for it to happen 10 or 20 times back to back. Because that is exactly what we have seen in this market over the last 2 years. Complete and absolute insanity. And that is why this method, this approach, is really a viable tool for long-term sustainability. Keep your demo account running. Collect that information. Study it. Learn it. And trade wisely. If you have any questions, please feel free to leave them in a comment. Please let me know how this feature works for you and whether or not you feel it is in your best interest. Now, you can disable the stop loss manually by simply using that setting, or just not put it in the configuration file at all. If it's not in the configuration file, it's not active. But if you want to disable it temporarily without taking it out of your configuration file, that is what you do. Simply leave it at 0. Again, thank you for watching. Leave me any comments or questions. If you like this video, please hit that thumbs up. Help somebody get into this type of a system that needs or wants to be able to grow in a reasonable way. If you're not subscribed, please subscribe. Thank you, and until next time.